everyone. Welcome to the 24th Learn live stream session. I'm Sabrina, your host for today. And with Bitcoin hovering around 99K and Ethereum at 1.9K, you couldn't have picked a better time to tune in. Today's live stream is called Market Meltdown or Mega Opportunity. And that's exactly what we're here to unpack. The markets have been choppy, macro news is wild, and crypto not just holding up, but showing signs of strength in a turbulent macro environment. We've got a lot to dive into, from US-China tariffs and global market jitters to how traders are staying safe and spotting opportunity in the noise. Just a quick reminder before we begin, we'll be doing 2 rounds of red packet giveaways today worth a total of 500 USDT, one for existing users and one for our new users. So when the red packet pops up on the screen, do be sure to click it to claim your reward. And of course, if you haven't already done so, do be sure to like this video and share this stream out so that everyone can get in on the fun. So first up, we are very pleased to welcome crypto influencer Alex. Hi Alex, it's great to meet you. Please give us a quick introduction of yourself and share what you do.
Sure. Thank you for having me. I've been actually working with Bybit for the last 3 or 4 years as a partner. I have a YouTube channel which is Marzel Crypto, and I've also got an AI agent analytics tool called Coin GPT. So I'm what you would call in the industry a KOL, but I'm also a founder for AI and analytics.
Thanks, Alex. We're glad to have you as a partner as well.
Thank
And
you.
next up, we have crypto influencer James, Crypto Guru. Hey, James, how's it going? Please also give us
Hello,
a short
everyone.
introduction of yourself.
Hi. Yeah, trader, influencer, lots of followers on X, YouTube, make daily videos talking about crypto, Bitcoin, investing, trading. Nice to see
All
you all.
right. Nice. We're very excited to hear what you guys have to say. Thanks for joining us today. For those of you who are just tuning in, I was just reminding the audience that we do have a red packet giveaway happening today. There are 2 rounds, one for our existing users and one for our new users. Just be sure that you read their terms and conditions and claim your reward once the red packet appears. All right, without further ado, let's just get started. So in the past month, we've seen the US announce sweeping tariffs, equity markets tumble, and yet Bitcoin has gone up to over 99K. So let's kick off with a big picture. What's really driving markets right now, and where does crypto fit in? So how have the recent US tariffs really influenced investor sentiment in both traditional and crypto markets? What do you think, Alex?
Yeah, it's definitely been choppy the last few months really since the start of the year. Kind of the wrong kind of choppy as well, kind of downward choppy. I think when the Bitcoin price got down to 74,000 month ago or so, I think it was. I really do believe that signaled the strength of the market, because we've really seen the conventional markets, the S&P, Nasdaq, much of the tech sector of stocks really perform really badly, and Bitcoin has a strong correlation. But it seems like in the last couple of months or so, particularly in the last month, we have seen, I don't want to say we've seen kind of a decorrelation, but Bitcoin is showing its strength despite the conditions we've seen in the greater macro field, acting more like gold. I mean, gold's been performing tremendously for the last couple of years, particularly in the last, this year. And I think for crypto, it's positioned very, very well for what's likely to come next in terms of quantitative tightening easing off, maybe quantitative easing starting, interest rates coming down, and hopefully some trade tariff deals being relaxed or agreed upon. So I think Bitcoin's held up pretty well with the overall fear.
Yeah, definitely. President Trump recently teased a major trade deal, which could shift market sentiment fast, right? Do you think that announcements like this genuinely move crypto markets, or is it more noise than signal? What do you think, James?
They did all these tariffs because the markets were super hot. So if you take over the government and the markets are super pumping, when you take over, that's not what you want, right? Because when you finish your presidency or in the midterms, you're going to have the markets crash. So what they do is they crash the markets in the beginning of their presidency, like Biden did, like Trump did the first presidency, like he did the second presidency. They put a lot of fear so that it cools down the markets. In December, when Trump came in, it was super overheated. Not all coins, traditional markets, Bitcoin, altcoins got destroyed because it hasn't been an altcoin market. It's been a Bitcoin market, and like a Bitcoin ETF, traditional money market. So there's been a lot of ETFs and companies buying Bitcoin, but it's not retail buying altcoins. So they crashed the market, and then now good news will come out. Good news will come out. Midterms will come out. They'll win the midterms. More good news will come out. You see what I mean? This is how I look at it. And in December, everything was overbought anyway. So
Yeah. So do you think that right now it's just up only?
now till midterms, and we'll be up on, I think, up only. It was peak fear 1 month ago. Everyone panicked, like super tariffs, which they didn't. If you think about it, it was just they did it. You know what I mean?
Mm.
It wasn't an
Oh,
economic crash that was by economic indicators. It was they did it on purpose.
okay. So do you think that inflationary pressures from such tariff wars would push more individuals toward cryptocurrencies, especially in economies with weakening fiat currencies?
I think the wars will bring people in, like all these wars. Like, why did Bitcoin pump recently? I think that was Pakistan and India. Like, if you had a lot of money there and this war potential started, like, first thing you'll do is try to get your currency out there. So I think tariffs a little bit, but more these wars is going to be what pushes this. Because how else do you leave a country with all your money? Unless you sell your houses, pack a suitcase, try to smuggle, like they're going to all start moving into Bitcoin as like a safety.
Mm. Do you agree, Alex?
Well, yeah, I mean, certainly, Bitcoin, one of its use cases is that it's transportable. You can own it yourself. It has the properties of gold, but with the efficiency of the digital economy. So definitely, when there's tyranny, Bitcoin is a non-confiscatable form of money. So it's brilliant. But I think touching upon what James was saying just before, it very much has been a institutional frenzy that we've seen from the start of the year. All the fear in the market is mainly a retail fear. Institutions have been buying. I mean, net inflows are positive for Bitcoin, at least anyway. And again, as James was saying, we were in a very overheated market, so we've had to cool off, and it does seem like we're poised for a bullish market going into midterms for the rest of the year. But it is dependent on fundamental factors, what Trump says, what Trump tweets for the short term. But for medium long term, I think Bitcoin and crypto is positioned very, very well.
Mm. Yeah,
They all like it as well, which is good. Trump and everyone, they're all into crypto. His whole cabinet is like crypto people.
Yep.
Well, not all of them, but a lot
Absolutely.
of them.
Yeah, and like you mentioned, there's a lot of institutional play, right? BlackRock recently purchased about 37 million worth of Bitcoin. So do you think that this reinforces institutional confidence in crypto assets? And do you think that this would actually sort of like ignite that, sort of get retail traders interested and jump on board as well?
Yeah, I mean, I personally believe that what really is going to get retail involved again, let's say from a psychological perspective, which I think is important, is we need to be above 100k, and we need to be above 100k for a little while, and then of course from more of a accessibility point of view, we need liquidity. We have seen global liquidity increase, but it hasn't hit retail. That liquidity doesn't hit retail.
Agree. The interest rate's too high.
The interest rate's too high. I mean, they talk about the inflation rate. I mean, this is on the back of the FOMC yesterday. How we knew, the market knew that he wasn't going to lower rates. It was about the rhetoric. But we want to the market needs to have confidence that rates are coming down. And although they've flirted with that, they've toyed with that idea, things are hard out there for the retail consumer. Things are very expensive. People don't have, like in 2020, 2021, when people were flush with cash, people had spare disposable money because their rents were low, their mortgages were low. People don't have the disposable money like they did 4 years ago to speculate on risk assets like Bitcoin, like altcoins, like meme coins. However, markets are forward leading, forward speculating. So what I believe that we're likely to see for the rest of the year is the big money coming in and early adopter retail betting on, that liquidity coming, lower interest rates coming, in light of a weakening economy, because the actual interest rate in America is very, very low. The real interest rate. I follow Trueflation on X, and they're printing like 1.4% is the real inflation rate right now. So way under 2% the target, and we're still at 4.5% interest rate. So it's too high. Trump's right. I agree, in my opinion.
Me too, yeah.
But I think they're so worried about inflation spiking back up. But it will get to the point where the debt is just, non-sustainable. But crypto is highly correlated with all of this liquidity.
And stablecoin flows are also rising again. Do you think that this is a signal of smart money entering the market, or just risk-off capital looking for like a temporary home?
Massive
James?
market entering the market now, like massive capital. So, okay, before it was retail. So think about that. So like average mom and dad, they have maybe a few $1,000s that they want to put into crypto, and that comes in. Now you're having massive whales coming in, they're not buying like $1,000 of Bitcoin. They're buying $2 billion, $100 million, $500 million, like, so this is really what's pushing the price. Retail, we used to talk like it was a big deal if someone came in and put like $1 billion one time into Bitcoin like 5 years ago. That was a massive deal. Now it's like billions every day is coming in. So I think massive capital is coming in. The big money is moving in now. And I think we're going to see this massive parabolic on this. Like it was like 13 years of adoption, and we're waiting for when it goes mainstream and parabolic. It's right now.
Right. And altcoins have largely lagged this macro-driven rebound. Why do you think most of the market gains are concentrated in Bitcoin and just a couple of large caps?
ETFs?
Yeah, I was going to say exactly that. It's the ETFs, it's the institutional adoption, and it's the lack of retail investment. Retail buy altcoins. They speculate. If you want to make a gain in an altcoin or meme coin right now, that's going to come from retail. The big money is not buying, MOG or PopCat. It's buying the Bitcoin ETF, but how money flows, it will eventually make its way into the and I think we're now we're at the foot of the mountain of entering into Ethereum, which will ignite an altcoin season. But we do need to see Bitcoin above 100, and we need to start seeing more positive news around tariffs, around inflation, etc. as well.
All right. Okay, thanks, guys. So let's take a quick look at some of the audience's questions. So someone actually asked, do you see a new peak for Bitcoin in the near future? What do you guys think? I mean, I'm sure that you guys are bullish.
September this year would be the peak of Bitcoin. If we go by the 4-year cycles, 560 days after the halving is the peak of the top of Bitcoin. And now we're like 400 and something, 450 days in. September is the 560 days. And that's the same cycle 4 years, every 4 years for the last 12 years.
Yeah, that's a great point.
If it stays the same.
Yeah. Okay. Have this on record. So by the time it comes, we can
I was
maybe
saying
take a
this
look back at this video.
last year, and it's already where I said it already came true in a way. Okay, what's the difference
It'll be
between 100K
interesting.
and 150K?
it'd be interesting to see if the 4-year cycle narrative
So,
stays as strong and cyclical as it's been. I think it was CZ said last week at Token 2049, he was talking about the 4-year cycle, analyzing, how much that can play out and be extrapolated into the future, because ultimately it's very much liquidity driven, and now Bitcoin isn't necessarily the asset it was 4 years ago. But in terms of like time of the year, yeah, if the 4-year cycle plays out, I think it would be around September, October, where you would see a peak.
yeah, just a quick little reminder, guys, that this is not this is not meant to be financial advice. Everything that we're discussing is just for educational purposes. Yeah. All right.
We
Keep
have
the
to always
questions
put
coming.
that no financial advice, NFA, but no one's ever going. It costs money to sue. So if you're going to sue someone, you would already be rich, and then you wouldn't sue someone because they gave you a prediction. So it's actually not. No one has to worry about it. It's quite
Yeah, that
stupid that the
makes
whole world puts NFA. It's like this European requirement to click yes, I accept privacy. Did it? It's a
I
bit
mean, you can never
redundant,
be
you know what I mean?
right.
Yeah.
Okay, keep the questions coming. Here's another one. So the price has been increasing since last night. Do you think we are all waiting for what Trump's about to say today? Or yeah, what do you
He
guys
held the market down. Don't look at it like now what's he going to say to
think?
bring up the market. Look at it like he's been holding it down with what he says. What he said, he's on purpose pushed it down. So now he's just going to let up. He's going to let go. You understand?
Mm-hmm, mm-hmm.
It's
Okay.
he's going
Yep,
to stop saying bad things. Yeah.
that's quite a different perspective to look at it. Right, thanks. Okay, so we've talked macro, but how are traders actually responding on the ground, especially with Bitcoin this close to 6 digits? So, Bitcoin near 99K feels like a key psychological milestone. How should traders be managing exposure as we approach such levels? What do you guys think?
Yeah, I think that. So yeah, you've got the psychological aspect of 100,000. Typically, big money is looking to short these levels because retail see that as an opportunity to long, and it can be. But we need to see some further confirmation. There is significant resistance at
Yeah.
around 102, 105,000. I think they're both weekly levels of resistance in the
But
chart,
not
and of
much
course you've got
pullback lately, right? Like the
not
last
much
few
pullback.
weeks, not at all. Like it's like
No,
steadily, like
steadily
it's
climbed
interesting.
from 74,000, and
Mhm.
I think we were saying before the stream as well, James. You pointed out not much volume as well, which is not typical,
Mhm.
with price like this.
Retail
But then
volume,
again,
but institutional, a lot.
institutional volume.
And they're not going to
Yeah. So
sell for like $2,000. Like they don't care about this. I think we're going to push through quite strong because of this. Like retail is the one that panic and they quickly like, oh, they have these psychological, but institutional, it's allocate 10% of my, like say a billionaire is like, okay, I want to allocate 10% of my portfolio to Bitcoin. That's $100 million. He's not going to put it all in once. He's going to put, okay, I want $3 million a day, or in the next year, I want like 300K a day. And they're going to keep allocating into the portfolio. That's why I think it's like just, it's not like a retail's like buying in or some cool news, they buy in and then they panic drop. It's like
Mhm.
allocate 10% of my portfolio from rich people all around the world. And they don't just put all of it in one hit. They DC it out. Like they
yeah,
TWAP.
yeah, and I think from a trader's point of view, you're going to start seeing a lot of longs enter the market when Bitcoin is back up above 100, and of course above all-time high. You're in that discovery zone, and that really what drives a frenzy. But you just got to be, if you're trading any asset on the low time frame, you have to manage risk accordingly. No one knows what the Bitcoin price is going to be tomorrow, next week, maybe even next month. But if you look
I
at,
do.
yeah, you follow
If
James,
you've been
the
following
crypto
me,
guru.
really, no, right? Like for like 4 years, I'm pretty on the money.
Pretty on the money, but low time frame, it is very hard. So, if
I
you
have a big
zoom out,
theory about this, what's going on. So it's technical analysis, which has been around for a long time. Now the whole world is losing their jobs because of AI and robotics that's coming and already happening. So now everyone's going to trading using technical analysis. Technical analysis, self-fulfilling prophecy, because people see the pattern, then they're like, oh, the pattern's going to do this. All the traders do that based off the pattern. So it's self-fulfilling prophecy. So it's like, it's like the heartbeat of the world, of the economy, this movement of prices is becoming like a scientifically structured, provable equation. You see what I mean? And I think that's what's going to be the universal basic income when all this robotics and AI. Like everyone, from my opinion, is already living on a universal basic income through crypto. Majority of people, they either directly got a lot of money from crypto or they work for people that made a lot of money in crypto already, I think.
Okay, that's
So this TA, if you follow TA, you're following the predictable pattern.
Is that a bad thing?
I think it's beautiful. It's like the world is becoming organized in a way that, it's like predictable. Before it wasn't like that. Before the markets were like very fluctuating, very unpredictable a lot. Like now you're seeing like a lot more stability. Like 4 years ago, Bitcoin went from 60K to 17K. Now we dropped from like 108K to 74K. It's not like, it's becoming more stable, more structured, there's a lot of buyers now supporting at the positions. There's Michael Saylor wanting to come in with 2 billion. There's this guy coming in with 500. There's a lot of supports now. So I think it's going to become more predictable.
With the market cap of Bitcoin, in the trillions, and the amount of holders, buyers, there's a more stable market for sure. So I just think that if you're trading Bitcoin, you just need to know your time horizon. Are you in this for a week trade, or are you in this for the cycle, or longer? So as long as you understand your time horizon, you can manage risk, and you don't need to worry so much about the key levels.
Yeah, if you're not a good trader, just DCA, buy every month a portion of your pay, 10% of your allocation of 30% of your whatever you want to invest, put it into Bitcoin every month, every week. And then if you become a good trader, then start. But I think it's going to become easy. Like what I'm seeing, it used to be much harder to trade. It's much easier to trade, in my opinion, now. Bitcoin was very hard to trade before. That's why I liked it. It was like a very strong challenge,
Yeah, it's because it's also very volatile. Right now, with a lot of resources.
Stabilizing.
Yeah, and it's stabilizing. It's, I guess, easier to predict. But of course, once again, make sure you do your due diligence and don't invest more than what you can afford to lose. So, yeah.
Always 10% is a good rule. Like, don't put more than 10% of your net worth into anything. It doesn't matter what people say. It's the greatest thing that ever existed, like hotcakes, just 10%. Then you don't risk too much. It's like me, it's 10% Tesla, 10% Nvidia, 10% Bitcoin, 10% Ethereum, 10% BNB,
Diversity.
like just 10%.
Diversity is key
Not too
for
much and not too
psychological
little.
aspects as well.
Yeah, it's very important to diversify your portfolio. So at least, when one goes down, not everything is red, All right. So, Ethereum just hit 1.9K as well, but it hasn't seen the same hype as Bitcoin. Do you think this is a sign that traders aren't as convinced yet? They're not buying into the Ethereum narrative anymore? Or what do you think?
I think it's going to be Bitcoin ETF. If this happens, like imagine it's like 2017, where it was Bitcoin, Ethereum, then altcoins. But this time it's not retail, it's institution ETFs. So they're going to go from Bitcoin to Ethereum, but this is like institutional, hundreds of billions of dollars is going to go from Bitcoin to Ethereum to altcoins.
If you look at the flows, and going back to the ETF flows, because that has been what's driving the market, you've seen the inflows, dwarf the Ethereum inflows, even retrospectively. So yeah, as James said, I mean, you will see that transition into Ethereum as they want to go down the risk curve, and they want to adopt it with the cycle. So Ethereum is massively unperformed Bitcoin for the last 2.5 years. I think we're still like 60% down against Bitcoin. Ethereum's down 60% against Bitcoin, which is typical in this kind of 4-year cycle, that it does lose a lot of steam. And it does seem to make up its gains in the last year of the bull
The last
market. So
month even.
yeah,
It's like pretty
so
quick.
if
The
you
Ethereum to altcoin part, it's fast.
very far, yeah,
It's like within a few months.
most miss it. Yeah, most miss it. You have to be holding to really reap the gains and rewards of it. But I think Ethereum is poised very well for the next leg of the cycle. Not only because of we've got the ETF, not only because of the price action that we've seen in the last few days, few weeks, but you have the government of the US. You have a pro Ethereum president, World Liberty Finance. They're one of the biggest advocates for Ethereum. It's still the DeFi, call it that. It's still the number one altcoin. Yeah, it's not sexy, it's not fun, it's not cheap like Solana, but ultimately there's no ETFs for any other coins other than Bitcoin and ETF. And if you want the billions, well, it comes from the ETFs first. So
You got to always
I think
compare it to just a few years ago. Like a few years ago, it was very little money. Like what money was going to Ethereum? Now you like when we're saying okay, it's little money is going to Ethereum. It's still the most money ever before, like hundreds of millions of dollars or per day going into Ethereum. You know what I mean? Like
billions
we're
in
saying,
some cases.
we're saying it's small, but compared to like Bitcoin right now. But if you compare it to like Ethereum 4 years ago or Bitcoin 4 years ago, this is crazy money that's coming into the market. It's huge into
Yeah,
Bitcoin,
and
Ethereum,
it,
Solana.
and I think on chain as well, like so Ethereum's doing what it can to keep up with the other altcoins for their strengths. Like we just had yesterday, the Ethereum fork upgrade, Pectra upgrade, which they're trying to, work on the fees, work on the speed, work on the scalability of it. But it does have a unique use case where Sway Solana doesn't. DeFi protocol security, and if we are going to be in a blockchain economy and everything's going to be on the blockchain, Ethereum is likely going to be a big part of that, at least for the next 4-8 years. There's nothing to say otherwise. So for this cycle, maybe the next cycle, I think buying Ethereum right now at 60% down against Bitcoin is the easiest trade you can make for the next 6-12 months, in my opinion. NFA.
I've got a trade on Ethereum already, or $25,000 in profits from 2 weeks ago or something. So I'm already long Ethereum.
Beautiful. Me too.
From
All right.
1,500.
Make sure you long on coin margin. You're inverse, right?
Not long on BTC, on Bybit. Ethereum long.
On Bybit, but with Ethereum coin margin or with USDT?
I always do USDT trades on Bybit.
Okay.
I don't know. I
Cool.
think it's the default, more liquidity.
Maybe.
Before, in the beginning, we used to use this like Bitcoin pair. Like you would trade like Ethereum to
Bitcoin
Bitcoin.
USD.
People. There's still a bit, but now it's gone more to this like USDT versus everything.
Yeah, but the thing is, like, if you're a swing trader, if you're trading for like weeks, months, and you're convinced that the price is going higher, for me it makes sense. Like if you long Ethereum inverse coin margin, which you can do on Bybit, obviously, then as the Ethereum
The
price
fees
goes
are
up,
less.
the fees are less, but your profits are in Ethereum
Ethereum.
as well. So if you're
Smart.
longing, so that's my thesis on long term.
It's a good one.
Swing
I just stopped doing it. I don't know why. Too much money. Making
USDT.
yeah, it's just easier, just
money trading.
Okay.
Yeah,
So-
I didn't care so much about the little. I try to get the chunk of the move now. The chunk of the move was last month. Like I made all my money for the next 2 years 3 weeks ago, when everyone was like, "Whoa," and like Trump is low and the tariffs and everyone, "Whoa," and Bitcoin went to 74K. and Nvidia went to $95, and Nike went to like $55, and Tesla went to $222, and everyone's like, that was the point to make all the money.
Yeah, you
Now
make
you
money
just
when
sell it
there's
into the
fear.
euphoria.
Yeah. I mean, when Bitcoin gets to, clearly above 120,000, 130,000 in a few months, that's when 90% of people are going to be buying. You should be buying now. This is
now,
where
or
you make the
best was
gains.
74. Best, because now
Best
we're
was
not in.
74.
That was like
Yeah, the
super
best
fear,
time.
and now you're like starting to, and the best time to sell it will be euphoria. So now we're like
Yeah.
we're already in a little bit.
Yeah, but the best time to plant a tree was 10 years ago. The next best time is now, right? So you don't wait for when you're seeing it on all the mainstream media news articles.
Yeah,
When
exactly.
when your
Now it's quiet.
brother-in-law. Now it's
Yeah.
quiet. Yeah, very quiet. So if you're fortunate enough to be watching this stream, we're still obviously early in the macro sense of crypto, but even in this cycle, it seems early in terms of price.
So you're saying that for those who have been waiting on the sidelines, this is considered a good moment to actually re-enter. Just that you should still just be cautious, right?
I entered a lot on that final dip like 3 weeks ago, that panic dip. I sold in December, 30th of December, like on the last day of the year. I had a whole thread about it. It was like a few 100,000 people saw it, but I sold everything then, and then I bought on that peak fear 7th of April.
I bet you got a lot of stick from people when you sold in December, telling you you're wrong and you're crazy, right?
Yeah, but because I did it in 2021, and then I bought the bottom 22, like I have a lot of fans that they're like, no, pay attention to me. So I don't need to
That's
fight
good.
for myself anymore. My audience does. It's nice.
Awesome.
So do you guys think that it's still a wise move to sort of rotate out of majors like Bitcoin and Ethereum into altcoins, especially when altcoin momentum isn't here yet with
Bitcoin,
not
Ethereum, altcoins. So when
Yeah.
Bitcoin stops, then it's going to move to Ethereum and then altcoins. So right now, Bitcoin is not stopped. You don't want to hold altcoins when Bitcoin goes down. You don't want to hold altcoins when Bitcoin goes up. You want to hold altcoins when Bitcoin starts to flatten, and that's when you're trying to, because when Bitcoin goes up, altcoins go down a lot of the time because everyone's like, oh, Bitcoin's going up, and they jump into Bitcoin from altcoins. So you really need to wait till Bitcoin stops before you get into altcoins.
Well, yeah, and on that point, I mean, if you look at the Bitcoin dominance, which has been just flying since 2022, we're up at 65% now. It does look, I mean, all the technical indicators suggest that it is incredibly overbought in terms of dominance. However, I don't think it factors in the fact that we've got the ETF and the institutional money buying. I mean, Bitcoin dominance in the past has gone up as high as 80%, 90%. I mean, yeah, there were less coins around. I don't know if it goes much higher. But as James said, yeah, you wanna wait for some kind of medium time frame chop, but bullish chop. Over the last few months, it's been bearish chop. We've had macro tariff, scaring the market. As soon as you have that kind of likely going to be between 109 and maybe 120,000, trying to break out, then you might start seeing the altcoins rally. And but yeah, the leading indicator is Ethereum. I would say you need to see Ethereum comfortably above probably $2,500 into the $3,000 because Ethereum's still not broken its high like Bitcoin has. So
It trapped a lot of people with Ethereum. Remember when everyone was saying buy it, even Trump got in, there was super euphoria. Then they were like, oh, buy Ethereum. World Liberty Fly bought Ethereum, it was like $4,000, and all of a sudden just cut in half.
Trump's son told everyone to buy it on X,
and then it just cut in half. That's what I mean. NFA, everyone understands, and that was a big trap because it looked like it was about to break all-time high, 4,000, and then it just it broke out. Even it looked like it was pushing out of massive very big trap
Mm.
on that Ethereum. Someone massively got liquidated. Like for it to drop from 4,000 to 1,500, someone massive got liquidated in that.
in such a
Whatever
short
happened.
period of time.
Yeah.
Yeah.
So anyway, altcoins, you're going to see them do. We're in year. Let's say in a bull market, you have kind of 3 years, and we are in the last 12 months. This is the time for altcoins. If you're talking about medium time frame horizons, it's not a bad shout to put some of your portfolio, in my opinion, from Bitcoin into alts, maybe even some of the lower cap gems. But it depends
Yeah,
on
it's
your
a
risk
great time
tolerance.
for long-term things. Like I like to buy projects that are already billionaires founders. So CZ is a billionaire founder, BNB. Ethereum, billionaire founder, Vitalik. Ton, billionaire founder,
On
Telegram.
mm.
Uniswap, billionaire founder, that guy. I've met him.
Visionaries, not here
Mhm.
for one
They're
cycle. They're
not
here
trying to
for
just withdraw money, you know what I mean? You want those
Mhm.
kind of, and I think now altcoins are the lowest. I think they're like very low, like bear market 2022 lows. A lot of altcoins.
Mhm.
They are. If you look at so you've got a few charts that you can look at for altcoins. So one is total 3. So if you go onto Trading View, total 3, it excludes Bitcoin and Ethereum from the equation, and you can look at the chart, and it's pretty bullish. I mean, you've got a massive cup and handle pattern forming on the monthly. You've also got a chart called Others, which excludes the top 10 cryptocurrencies by market cap, and that's actually forming quite a nice structure as well. And of course, the total market cap also forming a big cup and handle pattern. So if you want to go by technicals, just like gold and Bitcoin had, over the last 12, 18 months, they had their breakout. The altcoins will get a bid, and it requires a lot less capital to pump these markets than Bitcoin, because
Bitcoin. Mhm.
the market caps are so much lower. So you're going to have that ETF money flowing into Ethereum. Maybe this cycle we get some other ETFs approved, maybe XRP, maybe Solana,
I
maybe
think Solana
whatever.
will, XRP
Probably.
will.
Yeah, there's a lot of
Solana
That
definitely.
things.
Solana is
even
very
there's
popular.
talks. It is. There's even talks about Dogecoin having an ETF, and
Yeah.
it sounds laughable, but it could happen. It really, it could.
Yeah, we
You know,
know. So.
I think they'll launch ETFs on what will make them the money. So like what's very popular where people create volume traded would be
Mhm.
like Ethereum, Bitcoin, Solana would be XRP, the 4 biggest volume. Like if the institutions want to make money,
Mhm.
or this is what they'll launch, the ones where they can, the most users, the most volume. So
yeah. It
Solana would
takes
probably be a good
time.
one
It
also.
takes time for this liquidity to flow through the process that is crypto adoption and retail sentiment.
Mm.
But it's playing out like it has every other time, and there's nothing to suggest otherwise from what I can see anyway.
Mm. But
And it's
like
very
with
big. So like this correction, it's even though we corrected it for a lot of people, there was panic, but it was like it didn't correct much. If you've been in crypto for a long time, this is like
mm,
the smallest, like the market's showing a lot of strength for how bearish, like it's like right now, Bitcoin's at 99K and no one's talking about it. The funding fee is negative. The funding
mhm.
fee is negative at 99K. Like that, that's crazy. It's like almost unheard of. Usually it
But
should be already at 1%, like crazy high. You're paying massive fees to open a long, to keep a big long open. You're paying thousands of dollars a day, you know. Right now, you're
And
getting paid to keep a long open.
you're also only at about 50 on the fear and greed as well, and you're at
yeah,
100K. Like it just shows that retail is they're not here, um, but they're coming. So you can front run that if you're
I think if
watching it.
yesterday they released the interest rates, if they reduced it, it would have pumped like crazy. The market, like you saw the interest rates not get reduced, and everyone was expecting that. I wasn't. I was actually expecting them to reduce it because it makes no sense to squeeze everyone too much, when like you can just slowly taper it off. Jerome Powell, if you're watching, slowly taper it off. Don't squeeze everyone until you have to do another massive overcorrection. Like they did COVID, they printed too much. They had to massively increase the interest rates because they printed too much. They have to have a massive correction. Now they're doing the opposite. They always do this. It's like everyone went too left, like far left. Now they went swaying massive, like far right. We need to just chill, like go to the middle way. You know what I mean? And I think
Yeah.
they're squeezing it too much. But because of that, that's the mistake, because they think if they squeeze it too much, they can tame inflation. But what happens when you squeeze it too much is when they do drop it even a little bit, you have a massive pump, and that will then it's like delays like what they're trying to do.
But at nearly 99K, is it too late for retail traders to get in? How do you assess whether the entry now is smart or emotional?
DCA now. When it's
Mhm.
peak fear, so 74K, 17K, when everyone's crying and screaming and Bitcoin's finished and it's a scam, that's when you buy heavy. Now it's like, even though we can go up another 100K, 200, 150K, it's still, you would want a DCA now, because it could also go back to, let's say there's some big worldwide financial crash. We could go back to 50K. It's already high where you need a DCA.
Oh, I mean, ultimately, the easy way of managing that psychological aspect is what we were saying earlier: diversification. If you only have 10%, or maybe if you're young and you have a high conviction in crypto and you've got the time to take the risk, maybe 20%. If you've got 20% of your money in Bitcoin, okay, it corrects 30%, 40%, 50%. It doesn't matter, because you're not losing sleep over it. You can
Mm.
afford
more.
these dips. You can buy more, and you can you can rest easy that you're not overcommitting. What happens most of the time, unfortunately, is when you get these pumps, these frenzies, people become very over committed, over heavily diversified in one asset, not just crypto, like in 2008 with the property market. And it's a cause for concern. It ultimately leads to liquidations, and people lose sleep, because if you have nearly all your money in one asset and it's going down, people panic, they make silly decisions because they're emotional. So to not be emotional, if you're thinking about your Bitcoin portfolio, your crypto portfolio at night, or at least once a day, you're over invested. It shouldn't be like that, because if you're thinking about these things, your risk is too high.
In
On
my
that note,
opinion, I would say if you have not much money, no point buying Bitcoin. If you have $1,000 and you put into Bitcoin and it's 100K right now, and it goes to 200K, so 200,000 per Bitcoin, you have $2,000. Does nothing for your life. It's not going to change. In my opinion, like either you DCA and you keep working over your life and you keep building up a big position in Bitcoin, or you learn to trade with your smaller amounts and try to maximize your gains, and then use Bitcoin as a long-term savings. Think of Bitcoin as just a long-term savings. That's the best way. It's like
I
it's
agree.
the real saving.
Okay. Would having like a trading journal or like a trading plan actually help them to sort of manage their emotions and prevent that kind of feeling of like FOMO?
No, just time will get rid of that. If you keep learning, keep studying, you cry the first, like everyone like had this like staring at their portfolio, crying kind of thing, losing money in the beginning. You have to go through all these kind of experiences and learn and get better and study. And I
Yeah.
don't think I never was that like kind of journaling kind of and trying to, because I think it's better to just study. Like study technical patterns, study fundamentals, and get your knowledge base bigger, rather than trying to just correct what you little things that you barely know. Like 80/20. Better you learn like a lot and get
It's
better.
like
You know what I mean?
really understand what you're actually doing rather than just sort of like blindly following, like just a bit and then you try to do it and you tend to
Yeah.
make mistakes because you don't fully understand the extent of
And then you're
what.
journaling about like a little mistake that you barely know anything about. Better you read like 5 books, become
Mm.
very good, like trade, and then just keep studying is my recommendation. Everyone can do it if you study. And it's going to be, I think it's the new universal basic income. So
Mhm.
if you want income in the time of AI, start studying trading, investing, crypto. There's not going to
And
be that many jobs.
yeah, I mean, if you want to build up your knowledge, you can always head to Bybit Learn for a lot of guides and tutorials. I mean, you can also follow James or Alex. Just read a lot of news. Make sure you do your due diligence, and build your knowledge, like what James has said. And yeah, I believe that if, let's say, you want to try out trading, you can always create a demo trading account. Bybit also offers that. At least you get to trade without risk. We give you some funds and you can try it out, maybe try out some technical indicators as well. So these are things that could help you in getting better at your strategies as well before you actually invest or trade your actual funds.
And I would say,
So
like, if you don't become a plumber on day one, you don't become a pilot on day one. You wouldn't want to go and rush into flying a plane on your first day
mm,
of being a
mm,
pilot, of your first day of learning how to fly. Like, you want to spend like 3 years like studying how to be a pilot before you get in the
mm,
plane and try and fly your plane. Not a good
mm.
idea to fly it on the first day.
Yeah, it's way too risky to do that, right?
Try
Okay.
to learn, understand, be good,
Yep.
study.
Okay, so looking back at this year so far, just one question to wrap up before we move into audience Q&A. What's one thing you did right in your trading or analysis that others might be able to learn from? Let's start with you, Alex.
Yeah, I would say when I first got into trading, I used to look for all the different indicators and try and find confluence. So what do I mean by confluence? So you want to find indicators that tell you something and then find other indicators that kind of back up that theory. But ultimately, what the human mind does, it's very powerful. And quite often we can convince ourselves if we're already convinced of a direction, let's
Mm-hmm.
say. What I find is better, and what I've learned and what's definitely made me a more profitable trader is by looking not so much at the indicators and the patterns, but more about sentiment in the market and also timing the market. So where you can't time the market exactly in low time frame, you can take positions like, for example, when Bitcoin did get down to 74,000 and the sentiment on X and all the social media platforms was the sky is falling. Everyone panic. Bitcoin could be the end of the bull market. Generally, that's the time to buy, because one, you've got much bigger upside potential, and you've got a lot more sellers to bid against. So, I kind of shifted from more of a technical indicator trader to more of a let's say a swing trader, I guess you would call it. I look for higher time frame patterns,
Mm-hmm.
and that's maybe my style. I know people that do very well from low time frame trading, from scalp trading. But you know what? For low time frame trading, and I know Bybit's very good at this, and I know because I have a AI trading bot software as well. Um, there's some great bots. There's great AI trading and automated trading for low time frame trading. And to be honest, it beats a lot of the retail traders. But it depends on your style and depends on what kind of trader you are. For me personally, I'm more of a swing trader. I like taking positions when I see a lot of fear, or let's say on the opposite side of that as well.
What about you, James?
One that I used a lot recently was the reaction of the market to news. So in December, when Trump was saying, we're going to do Bitcoin strategic reserve, we're going to integrate it into the government, we're going to buy Bitcoin. Bitcoin kept, oh, cool, and it spiked to like 104 and then came back down. Spiked to like 108 and then came back down to 100. So it's showing you like that it was already high, you know. Doesn't matter the amount of good news that came out, it was no longer pumping. The same at 74K. It started, there was like bad tariff news, and Bitcoin stopped caring. Like at last month at 74K, there was a point where it stopped caring about what Trump said, what the tariff said.
Exhaustion in the market, yeah.
So look for this contradiction. When massive good news is coming out, no longer pumps, that's a warning sign, get out. Massive bad news comes out, no longer drops, that's a warning sign, get in. And it's a very strong one. It's one of the best.
It's a good point, actually. And it's kind of like what you saw yesterday with the tariffs, like no news is now good news. Whereas before it could have been good news, you know, doesn't even pump the market. If we had good news yesterday, like an interest rate cut,
crazy
the markets would have flown. They would have absolutely flown. They're so sensitive to anything at the moment. I mean, if Trump said anything or gave any kind of insinuation that rates coming down, liquidity's flying, Bitcoin wants to rip right now. And I think that's why they're being very careful on what they say. Maybe they want to buy more. Who knows?
Yeah, buy more. They're building the reserve, and also till the midterm. They want it to pump hard on the midterms. So midterms in America means when they kind of like vote in which side again, Republic, Democrat. So if you want to win, you want to pump like if you're the incumbent, you want the market to be pumping when everyone's voting to vote to keep you in.
All right. Thanks, guys. Let's just take a few questions from the chat. You know, we've covered a lot today already. So let's hear what the audience have to say as well. So here's one question. In the context of global economic shifts, what is the long-term outlook for crypto as a mainstream asset?
Already becoming. It went from just like a group of nerds to that knew that it would become 10 million per Bitcoin in 2009, by the way. These nerds on the forum, Bitcoin Talk, I was one of them. So I say nerds with a nice sentiment. But they talked about what would happen with Bitcoin if it played out and if it worked in 2009 on Bitcoin Talk forum.org. You can check it out. And they were saying it would become 10 million per Bitcoin if it worked. The world would use it. It would become governments would buy it. They would use it as the reserve currency. You can check the post. I think it was from Hal Finney saying like what will happen if. And now it's like so it's much easier for anyone that was kind of understands about because they've been like it used to be nothing. No one talked about it. No one knew about it. So right now the presidents are talking about it. The presidents are buying. USA government's buying it. Like, how far it's come is amazing.
All right. Here's another question. What indicators should traders monitor to anticipate potential market corrections or trend reversals? Maybe Alex, would you like to take this one?
Yeah, sure. From my sort of trading indicator days, I think MACD would be a very popular one for seeing a shift in kind of a reversal. The MACD basically shows when there's a divergence on the indicator. You've also got some more basic indicators like the relative strength index, stochastic. These all show when something's overbought or oversold. You can generally pair that up with Fibonacci retracement tool as well. Fibonacci levels are quite an amazing thing. They're not just used in trading. They're kind of Fibonacci is wasn't an Italian philosopher, and he figured out that everything in the world has key levels basically in nature, in tools, in engineering, and it works in charts as well. And you can generally see that price respects these levels even before it's hit. So Fibonacci can generally give you a good indication of something is going to reverse, but no single indicator alone can work. It has to be several indicators and other factors as well.
It's important to use a combination of them, right? Rather than just focusing solely on one, right?
There's one good, like what Alex said, the stochastic. This one I think is if you were going to look at one, I like that one the most, the stochastic. On the weekly or monthly time frame between overbought and oversold, this one will if you just alone follow that, you'll be a successful investor.
It's great for beginners. Yeah, I think because it combines a few indicators, I think oscillators, should we say, in terms of sentiment, fear, and greed. So yeah, stochastic is a good one, particularly for beginners.
Yeah, and you can learn more about it on Bybit Learn as well. We also have an article on that. All right. I think in the interest of time, we will unfortunately have to end it here.
But quick,
With yeah. So that brings us to the end of
can I
today's
ask
session.
one question?
Oh yeah, sure.
Alex, what's your number one life advice? From everything you've learned in life, what would you tell your son, like the number one most important?
Wow, deep question. Not ready for that. Okay. It sounds cliche, but don't take life too seriously.
Mm,
Be kind and be curious.
mm.
That's what
Nice.
that's what I would say. And I guess I'll ask you the same thing, James. It'd be interesting to hear from you as well.
Relax. Everything, all your problems in life are self-created. You have to just relax your body, relax all your muscles, your face, like, oh, and relax. And then you're vibrating out the life that you live. So if you realize that you're tense everywhere, stressed, you're making blockages outside in your life, you know. So do everything from this point of super relaxed state.
Mm.
Great
Yeah,
advice
don't-
for traders in particular.
Wow.
So,
Yeah.
Yeah, there are a lot of, yeah. Don't make
Thanks, guys.
moves when you're not relaxed, when you're panicked.
don't
Yeah.
revenge trade.
Yes, that's very important. Love the advice, guys. All right. So
Do you want to
with
say?
that,
What about
uh,
yours?
for myself, I think knowledge is very important. Make sure that you keep yourself up to date with the news. It's very important to make informed decisions. So I think that's what I live by. Yeah.
Nice.
All right. Thanks, guys.
Thank you, everyone.
So
Great.
yeah. So just a quick little end off. So no one can really predict the exact top or bottom, but with the right tools, mindset, and planning, you don't need to. Staying ahead is about preparation, not prediction. So as crypto continues rewriting its relationship with the broader market, now's the time to stay sharp, stay focused, and stay ready. So a huge thank you to our amazing speakers, Alex and James, for sharing your insights.
Thank you. Thank you for having me.
Yeah, and of course, thank you to everyone who tuned in, dropped questions, and engaged with us live. If you want to keep the conversation going, head over to the Bybit Learn community. You can post your own analysis, exchange views, and the best part, you can actually earn rewards while doing so. As usual, please note that none of this is meant to be financial advice, and the topics discussed are purely for educational purposes. For more information, please visit our Bybit Learn website, and don't forget to connect with all of us on social media. We've got more exciting content lined up in the weeks to come, so stay tuned for our next live stream. Thanks again, and see you next time. Bye-bye.
Perfect. Thanks, guys.
Thank you, everyone.
See you.
See you.